Good morning, folks, and welcome to another one of my videos. I have the same three pairs on watch today. Those are Euro dollar, Kiwi dollar, and Aussie dollar. So sometimes in this game we have to wait for our entries to shape up, and sometimes we wait ages and they don't shape up at all. And that's where patience comes in. And I will touch on that more as we drill down into this video. But the setups that I'm looking for actually look nicer than they did yesterday morning, in my opinion and experience. And sometimes that's the case that unless the structures that we look for have been invalidated, often the longer we wait, the better they actually end up looking. And if you think of it as like an archer pulling back the bow on a bow and arrow, we need the market to correct. We need these corrective periods, which some people could find boring. We need them to correct because it's kind of like the archer pulling back the bow on a bow and arrow. And the longer the market corrects for, the more volume is being built up. And typically speaking, the more aggressive the subsequent impulse tends to be once that volume has actually built up. So I don't mind these corrective periods. They do allow me to do other things and not have to be quite as glued to the charts as I might be. Not that we're glued to the charts the way we trade, but it allows me to go and do other things while the market shapes up. So I don't mind the quiet periods. But anyway, without further ado, let's break down these pairs. So on the higher time frames, you will definitely know if you've been watching my previous videos why I'm looking at this on the higher time frames. But as we get down, the entries may have been tailored. Will have been tailored slightly differently to how I had them in the past because of how the market has shaped up in the last 24 hours. So we have a 1, 2, 3 touch structure. We have a 1, 2, or you could draw it from here, but a 1, 2, 3 wave move, 1, 2, 3, which taps into the last line in the sand. And by last line in the sand, I mean the last exchange of liquidity, which I can see on this chart, where there would likely be orders and where there would likely be profit taking. Okay, so we tap into that area and we push up aggressively, given that this is the weekly chart. We push up and then we start to correct. The market needs to breathe. That's the analogy that I meant to say a moment ago. When we have these big impulses, the market needs to breathe. And typically speaking, if you think of these impulses as a marathon runner, for example, versus a 100-meter runner, then if someone's just run a marathon, they probably need to take a bigger breath than someone who's just run the 100 meters. So that's just an analogy that I like to keep in my mind, because analogies, I find it difficult to learn things. So one of the things that's helped me to learn trading is to analogize and can try and contextualize everything to create additional neural pathways in my mind. But that's another topic for another day. So we push up, we get that impulse followed by the correction. But the first thing that stands out, I mean, this could have been a running channel, but the first thing that stands out is that we have an ascending structure. It's not like we've tapped into this low. It's not like we've tapped into that low. Okay, and so we have a series of what we call near misses, lows that get close to a previous low and don't quite tap into it. That gives me a clue that there's liquidity, likely still liquidity here, which needs to be filled for this longer term move to the upside to play out, because there's no need for price to come all the way back down here, because this is a completed piece of structure which tapped into the last piece of liquidity. So all of the profit taking and orders that were in that area should have now been filled. Of course, sometimes we do come down for a double bottom in such instances to go long, but typically speaking, this is a completed piece of structure. So that gives me a clue that this piece of structure, this 1, 2, 3, which taps into this area of liquidity, is potentially, on the higher degree, a shorter term move, which may take us all the way down to here to fill this series of near misses before we see that longer term move to the upside. Okay, so that helps me to form my bias and where my profit target, not that we actually set profit targets, we trail our stops, those of us who trade the Falcon strategy, but that gives me an indication as to where price will likely stop and reverse, if indeed it does. So you can see there we tap into this area, this structural move here. We have this 1, 2, 3, and then price taps into that. And as I said previously, if you just zoom in, one of the things which gives us an indication of how aggressively price might sell off or rally, if you're looking for longs, is when it reaches an area of liquidity, how sharp was the move. You can see this move was a sharp move up followed by a sharp move down. That tells me that a lot of orders were placed in this area very quickly. They were filled. The stop losses are likely above, and then we sell off aggressively. Okay, so that was likely a large exchange of liquidity, which caused this very aggressive sell-off, which got more corrective as we came down and as people began to take profit. So when we tap into that area again, I'm anticipating rather a sell-off with the same level of aggression, and we got that. Of course, we break above because, as I've said previously, on the higher degree, what the retail traders tend to do is they tend to buy the highs and sell the lows. In no small part because they believe what was previously resistance becomes support once it's broken above. Of course, that happens, and then in the majority of cases, we see it come crashing down. And as I've touched on previously, the clue for me that this would likely be the case is that we even have a 1, 2, 3 last leg, which lines up with this 1, 2, 3, which doesn't quite line up with this liquidity point, which often causes even more aggressive sell-offs because when price breaks out of this structure, it confuses people. They think it's going long. They then start buying into the liquidity point, and then it comes crashing down. So now I'm looking on the higher time frames, given that that part of the theory has been confirmed, and then we get the series of smaller corrections into larger ones in this corrective wave. And when we see a corrective wave like that, typically speaking, that is a middle section before, in this instance, that longer term move to the upside, which I was talking about, which once again confirms the bias even more. But nothing is 100% confirmed in trading. All we can do is stack the confluences. So now I'm looking at now my bias is confirmed. I asked myself, what is the positioning like? The positioning is good. We're well positioned for a move down to this area. We're underneath this trend line. As I said yesterday, I've just reined this in just because this, to me, looks like a separate piece of structure. I then asked myself, what is the sequence like? The sequence, although it's a corrective wave, is good because we started off with a tighter correction into the larger ones, into the smaller, into the larger, etc., etc. Even though it's a corrective wave, I can separate the structures and make sense of them. One of the things I like about this is that we are trading entirely below this low now, and we've had this impulse down followed by this correction. We do have an expanding pattern, so when we have highs which are either equal to each other, or we have a trend line which slopes up slightly, and we have a trend line at the bottom which slopes down, this is what we call an expanding pattern. We typically like these because they tend to give us, if we're looking to get short, more room. One of the reasons we like these is because they tend to give us more room to get to the bottom of structure, versus obviously if this was as it was yesterday, a more parallel channel where we would have maybe our trend line, down to this area. So that's one of the reasons that we like expanding patterns. So what I'll be looking for today, just being mindful of the time, is the following. If we tap into this area, this is likely where you can see a bit of a sharp move up. If I just drill down to the 15-minute, it might make it a little bit clearer. What do we have there? What have I been talking about? We have this sharp move up, sharp move down. We tap into the area, but we don't really break above it. Sometimes we need to break above an area because the stop losses and the limit orders are sat just above it. And one of the clues that they may be sat just above it is the fact that we have a little area of consolidation sat just above it, which is likely where there may be more orders. Okay, I'm not too concerned about this one, although we could, it has to be said, retest the back end of this. And one of the reasons we could retest the back end of this is because I've noticed these are one of the observations that I've noticed personally, is that when we have a trend line that's sloping down like that, when price does react from the top of the structure, so let's say this is an impulse correction continuation to get long, the continuation tends to form somewhere which gives us a trend line which is of a similar gradient to that, the bottom one. So what I mean by that is that it's not unthinkable that we would have a trend line before this commits to the downside, which pushes up to this area and gives us something which is of a similar gradient, okay, which confirms, one of the likelihoods, which is that we could tap into that little area of consolidation I just showed you, or potentially tap the back end of this. So because of this, this affects my entry ever so slightly, okay? So I personally won't be looking for a risk entry where I look to call the tops here because of all those things considered. What I'll be looking for is price to tap into that area and then push down and then correct. And the correction afterwards is the crucial bit here, because that is the confirmation that those of us who trade the Falcon strategy look for to determine, yes, okay, we've done enough, we've tapped into enough liquidity, price is not going up to that little inflection point and it's not retesting the back end of that. Of course, nothing, as I said, is certain in trading, but this is the confirmation that we look for, which typically the majority of the time confirms that we're not tapping up to any higher areas before the move to the downside occurs. And if we get that little correction, the tap into that area, push down on the flag, and I will be looking to get short on the break of the flag or within it. If we have two confirmed bottoms and we tap the first top, if we reject from that first top, that's what we call a risk entry within a flag. Okay, I've just drawn the more least lucrative entry just so that I can determine whether I have enough room to manage this to the lows. But if we get the risk entry within the flag, typically speaking, the profit potential down to this area would be almost double. Okay, so this is the more conservative first target, which would give us something in the region of 7%. So that's what I'm going to be looking for on euro dollar today. And if I just draw down to, you can see this may be ready quite fairly quickly. So if we just draw down, okay, so weekly chart. So on the weekly chart, I said we had this near miss to this low. That's a big positive confluence factor. A slight negative is that we have this near miss to this high. However, as I've said previously, we can be all the way down here filling this near miss first before we come up to take this one out to tap into this area of liquidity. So the next thing I ask myself is there grounds for price to move all the way down to here to take out that near miss? And in my opinion, the answer is yes. We've corrected below here. If we were going to react from here, then we would likely wouldn't have seen price correct for so long below here, and we likely wouldn't have seen these two kind of high test candles there which reject this area. Okay, so another point to mention, we have a 1, 2, 3 wave move tapping into this area with the two near misses there. We tap into the area and we reject. Okay, so we see these patterns look for over and over again. So I'm satisfied that we've done enough on the higher time frames to tap into this area before we actually go all the way up here, because there's nothing to suggest at the moment, given that price is also corrected underneath this low, that we're suddenly going to reject and move to the upside. So the next thing I ask myself, so with that in mind, that gives me an indication that I'm well positioned. The sequence of flags looks good. Let's be pattern separating again. This looks like a fairly reliable sequence. So now it's all about the entry, okay? So I've separated these structures. And again, once again, if we were going to react from this low to go long, then we likely wouldn't have seen price tap into it, come back down, tap into it again, come back down, tap into it again. It's tapped into it 3 times, and then it's moved up in a very exhaustive, non-progressive way, giving me a clue that there was not enough liquidity here to send this to the upside. So that, with all things considered, what I'll be looking for today is something slightly different to what I was looking for yesterday. Kiwi dollar, that's the alert on this pair just gone off. The reason I'm looking for something different, and not, if you watched previous yesterday's video, you would notice I was just looking for this push down in this flag. Now I will be interested in the risk entry, so where we effectively call the top after, you can see I've said here, if price reaches the area, you can see what it says here, I'm not going to read it all, then I'll be looking to get short with a risk entry either after a phase line break on either the 1 hour or the 15-minute chart. or just below a 1 hour rejection. The reason for that is because we have within this structure, we now have a 1, 2, 3 last leg leading up to it. Okay, so that gives me a clue that this, if it completes here and it rejects, is a completed piece of structure, which just so happens to line up with this sharp move up and this sharp move down, giving me a clue that this is where the order likely where all the orders are. And if we just measure this impulse and we take that to there, that is almost 50% bang on. So this is a healthy correction. So all these things considered, I would take a risk entry here. But one of the things I'll be looking for first, given that we have this is a 4-hour structure, is I will be looking for my rules are within a 4-hour structure, a structure that I can see on the 4-hour chart. I'm waiting for a 1 hour close in this area. So if this candle, it's 6:30 a.m. If this candle closes in this area, this 1 hour candle at 7 o'clock, then that gives me permission to then look for entries on the be looking for entries from this area here. Of course, if there's anything that's unclear about it, I'm not sure what would be unclear about it at the moment, or I missed the entry, then I'll be looking for the push down followed by the flag. And then I'll be looking to get short either on the break or within the flag. And what I'm going to do after this video, given that my alert is now triggered and we're in the ballpark for the sell, is I'm going to set a Google Calendar reminder to remind me to check the 1 hour close at just before 7 a.m. so that I can determine whether we have actually closed in this area, because of course we could reject, we could wick there, and in my experience, just to touch on it, when we wick to an area, we tend to come up and fill the wick before we see the move to the downside. So when I saw these two wicks this morning, I was anticipating that we would come back to fill those, because if you look on the line chart, price, those wicks didn't actually reach there. So a line chart is a good filtering tool to determine whether price actually reached an area or whether it's actually just volatility. So I'm going to do that after this video, but I'm just going to talk you through Aussie dollar ever so quickly. It's going to be a similar picture with Aussie dollar, the sister pair of Kiwi dollar. Similar picture, okay? So we have this area here. We do have a slight near miss, not as noticeable a one. But we have this, we move into this area by way of this 1, 2, 3, tap into that area, we push down, we correct sideways, and now we have these impulse correction continuations. We don't have a near miss to this area, which is not a negative, but it's with Kiwi dollar, that was an additional positive factor. But we also have a decent sequence of flags, slightly larger one on the higher degree there to start with. But we have, on the whole, we have a decent sequence of flags, which you can see I've easily been able to pattern separate. One of the slight negatives is the fact that we have, we're kind of trading above this low rather than below it, but that's okay, that's fine. It would have been better if, as with euro dollar, we were below the low or trading through it, but we're slightly above. That's absolutely fine. We've corrected sideways, and you can see we have this 1, 2, potential 3, which lines up with an area of liquidity, which once again is proportionate to the move down. So because of that, what I'll be looking for is the following. And just to touch on it very quickly, is that one of the clues for me that we would come back up is the fact that when we moved down initially, we see this very large correction relative to this move down, which gives me a clue that this is likely going to do this at what it did, and then do the same thing again, and then push back up to this area, which is exactly what happened. So when the corrections are disproportionate to an impulse down or up, that's often what we see. So once again, what I'll be looking for today, of course, in this instance, we haven't actually pushed up to this area yet, but we likely will within the next hour or so. So once again, I'll be looking for, we have a 1, 2, 3. I'll be looking for a risk entry within this area, or the push down and the flag. And then once again, I'll be able to manage this quite easily to these lows, which is likely where price would react if it was going to respond in an aggressive manner in the other direction. But that's what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I will be back on Monday, most likely, if I have a pair or pairs on watch, with another one of these videos. Thanks for watching. Have a great day. Have a great weekend, and I will speak to you again soon.